Hello everyone, I'm SAKSHi. Today I will be presenting on the topic of role of technology in microfinance, enhancing financial inclusion through digital innovation. Microfinance plays a critical role in promoting financial inclusion by providing small loans, savings and insurance services to low income and underserved populations. However, the true transformation of microfinance has been driven by technology. Digital systems have made operations more efficient, transparent, and scalable. In this presentation, I will discuss how technology is reshaping microfinance operations, improving outreach, reduction of risk, and strengthening of financial inclusion, especially in the Indian context. Microfinance refers to the provision of financial services such as microloans, serving micro insurance to individuals who lack access to formal banking systems. These services are typically delivered through microfinance institutions, self-help groups known as SSG. Traditionally, microfinance relied heavily on physical meetings, paper documentation, and manual record keeping. While the model helped build trust and grassroots level, it was operationally expensive, time consuming, and difficult to scale. Technology has transformed this ecosystem from manual process to digital platforms, increasing speed, accuracy, and outreach while preserving the human element that is central to microfinance. Traditional microfinance face several structural challenges. First is high transaction cost due to frequent field visit and cash collections. Second is manual record keeping, which increased errors and delayed reporting. Third is limited rural outreach because expansion required physical infrastructure. Fourth is slow loan processing due to lengthy verification procedures. Technology addresses these constraints by automating process, reducing paperwork, and enabling remote verification and centralizing data systems. This shift improves efficiency, reduces cost, and allows institutions to serve a larger population sustainably. One of the most significant advancement in microfinance is digital onboarding through electronic know your customer or e-KYC systems. In India, Aadhaar e-KYC and biometric authentication enables instant identity verification. Previously, customers were required to submit multiple physical documents, leading to delays and higher administrative cost. With digital onboarding, accounts opening is paperless, identity fraud is reduced, loan approvals are significantly faster. This not only improves operational efficiency but also enhances transparency and regulatory compliance. Modern microfinance institutions now operate using core banking systems and management information systems. These systems provide centralized digital database, real-time loan tracking, automated reporting, portfolio monitoring. With real-time data availability, management can access repayment patterns, monitor risk exposure, and make data-driven decisions. This improves the risk management, regulatory compliance, operational transparency. Technology therefore strengthens institutional governance and financial sustainability. Now coming to the digital payments and collection, digital payments have been revolutionized in the microfinance repayment models. Earlier, repayments were collected in cash, which posed risk of theft, mismanagement, and delays. Today, digital payment channels such as UPI, Aadhaar-enabled payment system that is called AEPS, mobile wallets allowed clients to make secure real-time transactions. This reduces operational risk, improves accuracy, and lowers transaction costs. Digital collection also create digital histories which help in better credit assessment. Now coming to the mobile apps for field staff. Field officers now use mobile application for loan orientation, digital attendance, collection tracking, uh, customer data capture. Instead of manual registers, officers use smartphone or tablets, increasing productivity and reducing human error. Additionally, technology enables improved credit assessment. Institutions now analyze digital repayment history, transaction patterns, alternative data sources. This data-driven approach reduces default risk and enhances responsibility lending. Self-help groups also benefits from digital records keeping, mobile-based and financial literacy training. Credit assessment, alternative data usage, uh, credit assessment and self-help group digitalization. Credit assessment uses alternative data uses usage, transaction history, repayment behavior, and self-help digitalizations in our digital record keeping, self-help group portals, mobile based financial training, uh, detailed explanation is technology enables microfinance institution to use digital transactions data and repayment history to access creditworthiness. Self-help group benefit from digital payment that maintain transparent records, improve bank linkage, provide financial literacy through mobile training, and enhances inclusion and reduces credit risk. Now coming to the role of fintech in microfinance, the contribution are digital lending platform, fintech, mutual microfinance institutional partnerships, cost efficiency. Fintech companies use algorithms and mobile platforms to provide quick loan approvals. They partner with microfinance institutions to expand reach and reduce costs. However, concerns include data privacy risk, over lending, responsible lending issues. Um, Proper regulation is essential to balance innovation and consumer protection. Now coming to the benefits of technology. Technology creates a win-win situation. Institutions improve efficiency and reduce default risk. Clients receive faster, safer, and transparent services. The challenges and risk in this is while technology improves efficiency, it may exclude those who lack smartphones or digital literacy. Cybersecurity threats and data breaches are major concerns. Therefore, digital inclusion must be supported by financial literacy and regulatory safeguards. India has developed one of the strongest digital public infrastructure globally. Aadhaar enables identity verification, UPI enables instant payments. The Digital India initiative promotes digital access even in rural areas. This ecosystem supports rapid growth of digital microfinance services. Now coming to the future trends, the emerging technologies, future microfinance models will use artificial intelligence to access credit risk more accurately. Blockchain may improve transparency in loan tracking. Sustainable finance solution will promote green lending practices. Technology will continue to drive inclusion, but human trust will remain central. The coming to the conclusion, technology is powerful enable of financial inclusion in microfinance. However, true inclusion requires a balanced approach combining digital innovation with human relationship, ethical lending practices, and strong regulations. Thank you.